The Atlanta real estate market was on fire after 2020, and then interest rates shot up. The market went completely flat in the spring for 3 consecutive years. That is until this year. Something happened in April that was surprising. That and more coming up in this month's edition of Atlanta's Housing Market Update. Let's jump right into it. 4,493. That's the number. What is the number, you might ask? Well, after 3 consecutive years of having almost the exact number of properties going under contract in the month of April, we finally had to jump up. In 2023, we had 3,863 properties go pending in April, and then 3,846, 3,867. The market was doing the exact same thing year over year over year. That is until this April. This April, we've had a 16.2% increase in the number of properties going under contract. Not just under contract, but getting through the due diligence period and going pending. Why is that such an interesting number? Well, I don't know if you've noticed, but interest rates have not been trending down. I mean, they were at the beginning of the year. They crested the high fives for just a little bit of time before everything started happening in the Middle East, and then they shot back up. We're going to look at interest rates here in just a moment. But to me, I see a number like this, and I think that there's only so much time that somebody can sit on the sidelines and wait for the markets before they have to do something. And I think that's what we're seeing right now. People are starting to become a little bit more, not necessarily comfortable, but they're not expecting rates to shoot down and they still have to get on with their lives. And so there are more people transacting in real estate in the greater Atlanta area this year than in previous Aprils. So that's fascinating. Now, 4,493 is a number in the right direction, but as you can see from this chart here, it's a far cry from where we were in previous years. As a matter of fact, April 2022 is when interest rates started going basically to the moon, right? In a bad way. So after that, rates were high. People were on the fence, kind of waiting to see what would happen. And that explains the 3,800 and change every single year. And now we're back. So it'll be interesting to see this time next year, depending on where rates go, because I'm not necessarily expecting rates to shoot down into the fives over the course of this next year, but that could happen. You've got a new Fed chair. They are injecting billions of dollars back into the market right now. So we'll see what happens with that. But long term, I think that we'll finish the year somewhere in the sixes, right? So interestingly enough, the consensus is that the market is slow overall. If you read the headlines, it's slow here, it's slow there, it's slow everywhere, right? But the data shows not only are pendings up, but actives are up. So the market is moving, there's stuff happening, and closings have remained steady. So we have a lot to unpack in this video. And I realize this is on the last day of the month, and I've got just in a couple days, we're going to have the May data as well, but it's been a busy month. I wanted to make sure to get this out. We're going to do a better job of getting the market update video out a lot earlier in the month moving forward, that you have my commitments. So let's take a look at what we're covering today. We're going to cover the big picture, overall market, what's happening in the greater Atlanta area for all different property types. Then we're going to drill down into specific property types. We're going to look at what's happening for single family. Last month, we kind of glazed over what was happening in townhomes and condos, and we got comments and a request to bring back those specific areas. So what I'm going to do, this is going to be a longer video, but if you look at the timestamps in the description, you'll be able to jump to the section that is going to matter to you. So I recommend that you look at the big picture and then figure out which of the following sections will apply. So if you're a single family homes person, you'd look at the single family home section. If you want to see what's happening in townhomes, skip ahead to that when we get to that point. And then condos, same thing. Now it looks like I'm going to talk about, shakers, hot zips and stuff at the end and what it means for buyers and sellers, but really 5, 6, and 7 will be sprinkled in as we go through each section. So yeah, if look at the big picture and then jump to the section that is specific to you. And hey, you asked for townhomes and condos. So when I take a look at my metrics, I better see a tick up on those areas if you're interested in those, because it's a lot of time, which I'm happy to put into this to do the research and crunch the numbers and understand what's happening in those markets. But it's a much smaller part of the overall metro when you take a look at the real estate market as a whole. All right, moving on. So mortgage trends. So so we're kind of at around 6.5 right now. And you see where the 10-year treasury, it continues to follow almost exactly what the 10-year treasury is doing. Now, with rates, mortgage rates trending up, they had been trending up over these past couple of weeks. There was a little bit of a pullback this past week. When you take a look at it, I think it actually ended somewhere around 6.48. This was right up to that. Now, when you look at that, it's because of uncertainty. The mortgage rate, specifically the 30-year conventional, which follows the 10-year treasury, is very skittish with any sort of uncertainty in the world, right? Now, if the stock market's flying, which it continues to fly right now, your 10-year treasury moves upwards and that puts upward pressure on mortgage. We're going to look at some home affordability stuff based on these rates on this next one, but I'm not expecting these rates to just trend down. Over the past couple of years, the high for the Freddie Mac PMMS number, the week average was 7.79, but it did take up to 8.03 in October of 2023. The low was right before the war started, right at the end of February, we had an average of 5.98. So at the beginning of the year, everybody was optimistic, and then it shot back up. Some people pulled back, but we still had a very strong April. So let's look at how these rates are affecting affordability. So we're looking at 3 different periods. We're going to go back to October of 2023. Let's take the median price home, $415,000, 10% down conventional. It's the most popular loan. Principal and interest only. These numbers don't have taxes and insurance baked in because they vary wildly depending on the area, type of house, if age of the roof, all that kind of stuff, right? For insurance. And then property taxes depend on the jurisdiction, what their millage rates are and so forth. So the easiest thing to look at is principal and interest. So back in October of 2023, using the Freddie Mac weekly average of 7.79%, that payment worked out to be $2,842 a month. Right before the war started, $2,390. That's at 5.98%. Today we're at 25.19. So you kind of see what that ebb and flow is for payments. And there's no question that, if you were in the market at the right time, right in the month of February, right when it hit the low sixes, high fives, basically, you got a better deal on a house, but it's $130 a month. That's not to say that $130 a month is insignificant. That's a lot of money every single year, especially over the life of the loan. But I think it helps to explain that at some point, if you're going to need to make a move for your family or for your own interest, whether you have a family or not, you're going to need to move at some point. There's only so much time that you can stay put and decide not to take action when you have to get on with your life. And for a lot of people, especially this spring, that extra $130 a month is something that they are looking at absorbing. Now, there are different options in the marketplace. Of course, new construction, the builders are subsidizing lower rates quite tremendously, right? You're seeing 3.9, 4.9 for the life of the loan. But that means that you have to buy new construction, and that might not necessarily align with your goals, right? Especially the way some of these new construction homes are built nowadays. So let's get into overall market, and we're going to take a look at the big picture first. So here's where we are, and this is everything. This is new construction, resale, and we're going to look at every segment of the markets. We're looking at single family, we're looking at townhouses and condos. Blue single family, we're right at 414.8, so we rounded up to 415 for this last example. Townhouses are 385, condos are 285. If you go back to April of last year, we were at 410, so single families have trended up a little bit. If you take a look at townhouses, this time last year we were at 390, so they've trended down from 390 to 385 across the metro. And we're at 285. If you go back to April of last year, we were at 295, so it's a bigger drop for condos. Now, year over year, it's up 1.2%, down 1.3%, and down 3.4% for condos. Next. Now, these charts are available. I'm moving them. I'm going to be presenting them a little bit differently because this is all built on a different platform, but the charts will still be available. They'll be linked in the description and in that first comment. If you'd like to review these on your own time, you can. They're absolutely free to look for. You don't even have to give me emails or anything like that to access. So median days on market, condo market currently is at 57 days. I'd say rocket ship up over the past year and a half, isn't it? Right? Townhomes have been steadily trending upwards as well. We're at 47 days there. And single family, for the past couple months, we started the year at 30, and it's been at 30 ever since. But this time last year, we were at 23. So that's a 30% increase for single family. It's a 46.9% increase from 32 to 47 for townhouses. And condos works out to be a 62.9, almost 63% increase from 35 days median to 57. So market is slowing down. It is taking longer to attract a buyer and go under contract. Of course, these are median days. Now, next, months of supply. Are we in a buyer's market, seller's market? What kind of market are we in? So for condos as a whole, we're in a buyer's market. For townhomes, we are right there. That's going to trend into buyer's market over the next couple months. Single family has been trending upwards as well, but that's still technically a seller's market. A balanced market is 5 to 6 months of inventory. And what that means, if this is your first time watching one of my videos, if no new houses were to hit the market, then it would take 5 to 6 months in a balanced market to sell everything. In a seller's market, it would take less. And the reason it would take less is because there's more demand. Those properties hit the market, they come off the market sooner. And so sellers have the advantage in negotiating. In a buyer's market, the properties are sitting longer. There's more months of inventory, more months of supply. And for condos, if you're in the market right now to buy a condo, you really have an opportunity to get something at a better price, especially a better price than what we've seen in recent years, because there are a plethora of condos in the market. Townhomes are heading that way as well. Single family is a different animal altogether. Single family in Metro Atlanta continues to be the dominant form of type of house that people want to buy, and so there's still a lot of demand. Now we're going to break this down by section. We're going to get deep dive each of these a little bit later in the video, and you'll see broken down by county where the action is basically. So let's take a look next at pending ratio. So the pending ratio is a different way of looking at whether or not you're in a buyer's or a seller's market. 18 to 25% is considered a balanced market when it comes to pending ratio. Anything under 18% is a buyer's market. Anything over 25% is a seller's market. It's just a different metric. Sometimes when you're looking at this specific, like a specific zip code or a specific school district, and we can really deep dive these stats, the pending and the months of supply really align. But because we're looking at this from the overall market, there will be some variance there. So single family is considered right now, it's spring market, of course, so you're going to have a lot of demand in the market, and we're at 26%. So what this means, it's going to look at the number of properties that are going under contract in a 30-day period in a given area. So if you have 10 properties, let's call it 8 properties that are actives, and you have 2 properties that went under contract, what you would do is you would take the 2, you would take the 10, you'd add those, it's 10. Then you take the 2 that went under contract, divided by the 10, it's 20%. So there's a 20% pending ratio when you add the pendings and the actives and you divide the pendings by that number, okay? That's kind of how that works. So 20% for townhouses, it's right in the balanced market, and condos are at 13.8. So that's you have a lot of condos in the market. Very few of them are going under contract in a 30-day window. So as a seller, when you're looking at these, if you're single family, roughly over a quarter of the houses in a given period are going to be scooped up by a buyer. For condos, it's 1 out of 6, right? So if you're a seller and you're taking a look at this and you need to sell by a certain time, what this means for you is you have to price very, very conservatively, because if you try and price ambitiously and you're trying to test the market's going to test you. You're going to spend quite a bit of time on the market. So if you have to be somewhere in a certain period of time, you don't have time to test the market. If you're closing on new construction in August and we're heading into June tomorrow, that's how late this video is. You can't test the market. You've got to get the property sold in the month of June. You've got to price it a little bit more aggressively on the lower end in order to outcompete the choices that buyers have in the market around you. So be very cognizant of that. Your agent should be able to guide you with advice on how to position your property for success based on its condition, its location, quality of schools, area, demand, all that kind of stuff, so that you are one of the next properties that will sell. Because once you're under contract, it still takes 30 days to close on average, right? People hope for a cash deal that will close in 2 weeks, but the majority of the market buys with finance. So you should expect 30 days. Sometimes you need a little bit longer to close a deal. So if you are under contract for a new construction and you're closing at the beginning of August, that window of opportunity is closing very, very quickly. Hypothetical situation, right? Everyone's different, but this is where we are with the pending ratio. So list to sales ratio, what are houses actually selling for? So for townhouses, they are outperforming single family. The average townhouse is selling for 96% of the original ask. So buyers are getting a 4% discount on the original list price currently when it comes to townhouses. Single family is 95.7. This is going to vary by county. We'll take a look at that as well. Condos, getting great deals on that. You're getting almost 6% off the price of a condo right now. So 94.1%. So next, let's take a look at volume. And all of this data goes back to April 2010. So it's April over April for all of these years. And take a look. We're right there for the most sales volume ever. Now that's a sign of home values going up, right? It's not necessarily transaction count, but for single family, this is the most volume we've ever had ever. 2.35 billion. You go back to 2022 is 2.53. It's almost like it's 90 plus $1 million worth of volume that closed this month in April, or this past month in April. And this past year was 2.76, so we're still above that as well. It's the condos that aren't doing quite as well. And you go back to 21 and 22, there were some really nice luxury condo buildings in Buckhead that sold with penthouses that reached, if I recall, like $7-8 million a piece. So those buildings have sold, they're done. And ever since, they're not really rushing to build a whole bunch of condo buildings right now. So nonetheless, this is a lot of volume. And when we take a look at active listings, we are now cresting 18,000 active listings. So this is the overall market. Take a look at where we were last year and the year before. And with you can see this right here between 21 and 23 is exactly why the market did what it did with prices. It was a supply crunch basically that happened, and that put upward pressure on prices, and prices shot up. That's basically what happened. Now we're getting more and more inventory, and we have 12,749 houses. That's up roughly 6% year over year. Townhouses are up 16% year over year, and condos are up 3.7% year over year. You can see it here. Now, that's a lot of inventory, but you go back to the days of, when the market was a little bit more of a stable, equitable, balanced market. You're looking at 2014 to 2019. And to me, this kind of looks like a return to normalization. We'll see, because if this time next year trends up as well, now we're above what those numbers were, no question, right? So what about pendings? So pendings are up, which is great. We've got more pendings overall happening. There are more townhomes closing as well, or going under contract. So the pending stat here is really, once we're done with the due diligence period, once you're out of that active under contract stage and you switch to pending, that's what this is looking at. So it's up across the board. So up 16% year over year for single family, 10% and 7.6 for condos. Not quite where we were during that balanced market period, but it's trending towards that. Now, closed listings, single family homes, once this pops up, are down 1% year over year. Townhomes closings are down 10%, and for condos are down 6.8. That's the problem. So you have more inventory. This past month, you had more going under contract, but that's a lead indicator for what's going to happen in the month of May and June, because it takes 30, 45, 60 days to close out a transaction. So those are going to be good months. But in terms of actual closings, we had a little bit of a pullback year over year compared to last year, right? So failed listings are up nominally. So they're up almost 3% for single families, 11% for townhomes, and 5.2% for condos. It's not crazy, but still it's a trend that's going up. During the crazy period, the post-health crisis craziness, 21, 22, 23, you can see there weren't a lot of properties that were allowed to fail because people were buying everything. And now buyers, because interest rates have remained high and there's more inventory, people are choosier. You should be. There are more properties that are expiring and withdrawing and then relisting and all that kind of thing. So those are trending up. So let's look at price cuts from the overall market. I'm going to drill down into these for each of single family, townhome, and condos. But overall, for active listings, we have roughly 40% of all active listings, whether it's single family, townhomes, or condos, have cuts. So 40.8, 38%, and 40.5%, okay? And the average cut of the listings with cuts, right at 5.3 for single family, 4.4 for townhomes, and 6.2 for condos. But look at this difference. When you look at the properties that actually attracted a buyer and went under contract, less of them needed cuts. 30%, 36%, and 38.2%. But the cuts that they needed to have were bigger. So 6% versus 5.3, 5.8% versus 4.4. That's a big jump up. That's almost a point and a half more. And 7.2 versus 6.2. So I say this every single month, but if you're on the market and you've had a price cut and you still haven't attracted a buyer and you have more and more days on market that are accumulating, it's possible you haven't cut enough. And you can see the difference here. Sometimes you don't have to go too much farther. It depends where you started with your property. If you started really, really high and you're now chasing the market, that's a different story. But on average, we're looking at 6%, 5.8, and 7.2 for the different property types for the overall market, right? So we're going to drill down into this and I'll show you by county what those are a little bit later. Now, seller paid concessions. This is part of what took so long to crunch this month is I'm breaking down resale versus new construction in a lot of these different stats. Because if you're a seller if you're somebody who's watching me and you have a home to sell, you're probably not a builder. So you're a real person. And I wanted you to be able to see what's actually happening when we take the new construction out of the picture. So because that's what it is. You're a resale. So why compete with stats that are not going to be as accurate if it's the overall blended number? So that's what I'm doing. Okay. So resale, 67, roughly 2/3 of all of the sellers on resale for single family paid closing costs. And the average paid was just about $8,600, right? Townhomes, 69%. The average paid was $6,700. Condos, 58%, which is interesting to me because there are so many condos for sale, so few of them going under contract, and sellers, it's only 58% that have paid closing costs. And when they have paid closing costs, it's $5,400. Now that's also because when you take a look at what the median price is, the median price is a lot lower for a condo than it is for single family. So that's something to take into consideration. Now, look at the contrast with new construction. So for single family, 75% of the builders are paying closing costs, and they've paid closing costs of an average of $11.7 thousand. So $11,760. Townhomes, 86. That is almost every new construction townhome, and the average there is $10,432. Condos, there aren't quite as many new build condos, so this is a smaller data set, but nonetheless, 71% of them are paying closing costs, and it's the most of anything. So we saw what the price points were, right? And they're paying $11,900, almost $12,000 is the average paid. Some are paying above, some are paying less, but that's the average. So what do you think about that? Drop your thoughts in the comments and let me know about these concessions. Builders are doing quite a bit more. They're leading with these concessions to keep affordability low, to keep their prices high, to get people into neighborhoods. That is absolutely what's happening, because if they can keep, let's say you look at a $500,000 neighborhood, right, and the prices trend up, let's say they're at $550,000, it's better for them to take the money to help you buy down your interest rate permanently over a 30-year mortgage and to keep the sales prices higher in the neighborhood, because they're going to net more by doing that, by keeping the values higher. So that's what they're doing. That's why you're not seeing new construction prices come down a whole lot right now, because the incentives offset that, and that's by design. So it keeps affordability high. Meanwhile, resale is correcting a little bit. So, all right, we're going to now focus on single family residences. If you own a townhome and you want to watch this, great. If you want to skip ahead, look at the description to find the townhome section or the condo section, and we're going to be talking about the same stuff for each section. So if you're a single family home person, let's jump into it. Okay, so this is interesting. I wanted to show you what the median price premium is between new construction and resale, because new construction, especially over the last decade plus, has always carried a premium. Sometimes that premium was quite a bit higher. You take a look at January 2012, the median price was $235 for new construction. Meanwhile, it was 100 and almost half for resale back in 2012. Man, median price $120,000. Market's come a long way since, because we're at $405 today for resale, and new construction's at $474. So that blended price of $414.9, $414.5, whichever that was, is because there are so many more resales than there are new construction. But the new construction is quite a bit higher, $70,000 more for median price. So quite a bit of premium there. Now, if we look at the price by county, this is black is new construction, blue is resale, And look at the gap here in Cherokee. So what's being built and sold in Cherokee is a lot more than what the resales are selling for. We can see that in Cobb. You can see it in Fayette County with Trilith. You can see it in Forsyth County, although that gap is going to start adjusting a little bit. But nonetheless, it's a gap everywhere. It's that new construction premium, but I wanted to just show you the only place where it's different. Take a look at Fulton versus new versus resale. That's the only place in this entire chart where resale homes are selling for more than what new construction is. And Fulton is a very wide area. You can think areas of Alpharetta, Milton. There's a lot of new construction there. But when you start getting in town, you get to places like Buckhead and the in-town markets, and there you do have new construction, but they're not whole neighborhoods at that point. They're infill new construction. You buy an old house, knock it down, build something new, so there's less of them. Because of that, the resale market in Fulton outpaces the new construction market. Interesting, right? Now let's take a look at median price year over year for these counties, and in some areas, they've ticked up a little bit, right? Marginally. In many places, it's going to be roughly the same thing year over year. And then in some places, you've had some big pullbacks, like Forsyth County, for instance. Take a look at that. Forsyth, 687 this time last year. This April, 605 was the median price of the sales for that month. So that's a big drop. Meanwhile, everywhere else is about the same. It's up a little bit in Cherokee, up a little bit in Cobb, up a little bit in Fayette, which is surprising considering everything that's been happening in that county. And up in Fulton, everywhere else is about the same. So top appreciating zips. So these are zips. I'm showing the median price of 2025, 2026, and these are all zips that have a lot of sales. So this isn't a small sample size that's skewing the data by any means. It's 50 plus sales minimum by zip to remove the big outliers that will impact that data. But look at that, 30342. That's a 31% increase in the properties that sold this year compared to last year. So 1.1 last year, 1.45, almost 1.5 this year. Similarly, you go to DeKalb and this part of Decatur, 30032, 240 last year, 314.9 this year. That's a 30% increase in that part of DeKalb. Cobb, this is parts of Smyrna, 419 up to 510. It's 21%. Gwinnett, 404 to 472 in 17. That's 16%. Fayette, 349. So interesting that in certain areas you still have double-digit appreciation. This is another Smyrna zip, by the way. So 30080, 515 up to 572. It's an 11% increase year over year. So let's look at where we've seen the market decelerate in terms of prices and the depreciating zips. It's interesting. It's a different part of DeKalb, 30341. The median price in 25 was 717, and this year the homes in that area sold for 544 was the median price. So it's a drop of 24% year over year. Now, it really depends on what is selling, right? It doesn't necessarily mean that your home has swung up by 24% or swung down by 24% in a year. The pool of homes that have sold in that area have had that valuation shift. So you still, when we're running comps, when we're doing a CMA, a comparative market analysis, when someone is getting ready to sell a house or a buyer is getting ready to make an offer on a house and we want to understand how that house is priced or where it should be priced, we do an analysis. It's a comparable market analysis. You take a look. Generally speaking, 1 mile, I've seen appraisers do 2 most recently. It's becoming quite common. You're looking at similar features, similar size, similar age, similar style of home, right? And you're looking to see what the 5 or 6 most comparable properties have sold for to give you an idea of what an appraiser would say your home is worth. So that's how you get very specific about your house. But if you're in this zip and you're seeing these numbers, it's not like the sky is necessarily falling if you're in 30341. And I'm not saying that your home price has dropped by 24%. We have to look hyper locally and to see how your house stands out in its immediate competitive segment around it, if that makes sense. Okay, that's kind of what I want you to think about. But this is what the market's done in 25 versus 26. So nonetheless, that whole bucket of homes that sold this year in that part of DeKalb had a 24% drop in value. That's what that is. So moving on, days on market, you're taking a look and you're seeing an uptick almost everywhere. Clayton is the only one on here where it's basically the same year over year, but everywhere else, it's taking a little bit longer this year to sell houses. And this is not list to close. This is list to going under contract for the final time. That's the way that I want you to look at this. So next, you're going to take a look at the fastest moving zips. So 30328 is moving in a median days, like we just saw for Fulton, that the median days on market for Fulton is 27 days, right? So keep that in mind. And here, this zip here, the median sales price is 975. It's moving at 6 days on market. Take a look at this part of the cab, 30338. It's 6 days. 30306 in town, 7. Another in town zip, 8 days. 5, that's Alpharetta, 9. Decatur, 9 days. East Cobb, 3068 Walton High School District, that is 9 days. And then back into like that Sandy Springs and Alpharetta, Cumming, Johns Creek area, 11 days. Parts of Norcross, Peachtree Corners, 11. Also parts of Johns Creek. So look at these median prices. So these are not some of the fastest moving. What do these have in common is the best thing to look at, right? And most of these are in very affluent areas that are driven by very strong schools. So people want to live in the strongest school districts, and the homes in those areas are moving very, very quickly. Now, where they're not moving quite as quickly, take a look here. Again, the median for all of Fulton was 27, but we're at 66 days in 30314. We're at 60 days in 30337, 30315, 56 days. All of these predominantly are Fulton and DeKalb zips for 55 to 66 days on market median. And it's on the lower end of the market as well. This is still single family. The average, the median price for single family is 405 on a resale. And this is all resale, by the way. This is, unless I state otherwise, all of these stats are for resale homes. I'm not even looking at new construction right now. So interesting, just to see where the market is moving quickly. And I wanted to give you some examples of where it's not moving quite as quickly. So you've got the green pockets where it's moving fast. You can kind of see on the south side where it's moving a little bit slower. So moving on, days on market by county, new versus resale. Resale is moving a lot faster than new construction. See, this is why I wanted to separate the stats, because if you're thinking about selling your home and you look at the blended stat and you see that, in, let's call it Gwinnett County, that new construction is moving in 73 days and single family resale is moving in 28, that blended number is probably somewhere around 40, like high 30s, 40. But the good news is it's only 28 days for resale. So this is great, right? Cobb is the fastest moving county for resale right now. It's taking only 3 weeks at the median of the market to attract a buyer. It's phenomenal. So this is great. I would say across the board, there's nothing really super crazy here for resale. I mean, Douglas and Rockdale are a little bit higher. Same thing with Paulding, but they're always a little bit higher because they're a little bit further out. But Forsyth, which is also further out, but people like to live in Forsyth, 27 days, 27 for Fulton, 28 for Gwinnett. So Cherokee 24. Some properties are moving quite quickly in general in those counties. Now, months of supply by county, Fayette is now up to 7.7. That might have something to do with Marvel moving its operations out of Trilith and to the United Kingdom. And there's just a whole bunch of houses for sale. You take a look at Trilith in general, there's a lot of houses. I had a client looking in Fayetteville not too long ago, and we looked at some of the homes in that neighborhood, and there are a lot of for sale signs. So 7.7 months of supply. Again, this is just for resale. It's a big jump up from last year. Last year, it was in a balanced market. This year, boom, buyer's market. Spring market, nonetheless, buyer's market. So if you want to live in that area, there's a lot of competition in terms of having a lot of active properties. You should be more aggressive with the offers that you make. And if you're a seller, you better price better, because if you don't, you're going to sit on the market quite some time. So nonetheless, most of the metro, with the exception of Forsyth, which has entered balance, same thing with Rockdale, is still a seller's market when it comes to single family. So that's not to say that that gives you carte blanche to go and overprice the property to test the market. If you don't care if you sell this year or not, you kind of want to see if you could push the envelope a little bit, and you're in one of the zip codes that I showed with the fastest moving zips, maybe you could price it a little bit more aggressively to see what happens, aggressively to the upside. But if you need to be gone by a certain period of time, that's a losing strategy. Nonetheless, seller's market almost across the board for single family. Now, months of supply by county, new versus resale, look at some of these. So there's a year of supply for new construction in Fayette and Forsyth. In Forsyth, I have a client building a brand new house with Toll Brothers right now. I'm not going to disclose the neighborhood, but the neighborhood that they're in is selling pretty well. But we were speaking with one of the construction managers because we were getting ready to do the pre-sheetrock walk, basically. That's before they put the walls up and you get to see, all the framing and the electrical and the plumbing. And we had our inspection done so that we could make sure all that was done before all that gets sealed up. And not going to name names, but he was saying that they have some communities that are just not selling right now. And when I look at this, I know how many homes, how many communities have been opened up in Forsyth for Toll Brothers, and it's a lot. And I don't think they're selling quite as well as they would have hoped right now, but there's 12 months of supply up there. So if you are a fan of Toll, and I'll tell you, this home inspection was awesome. When you do research about Toll Brothers, you're going to find a lot of negative feedback about Toll in Utah. They haven't done the best job there. They've had their challenges. Here in Georgia, you're going to find less of that. When Toll entered the market, they bought a builder here that had a really great track record of building, and that became Toll Brothers, and they've continued that really good string of building, basically. So I'm finding that when we do these inspections on these Toll Brother houses, that there's not a ton of stuff that's popping up. When we do our pre-framing or pre-sheetrock inspection, we had foundation inspection done. It was solid. So kudos to them. But there's a lot of new construction that's just kind of sitting on the market in Forsyth, and a lot of that is Toll. So if you're in the market for a Toll house and you're going to start to see some bigger and stronger incentives, more national sales events with better incentives to get people off the fence to buy their homes. Now, they are well built here, so certainly that is a good thing. Now, overall, new construction in Paulding is a very big seller's market, and that's because what's being built in Paulding County is quite affordable. So when you look at Paulding, it's really kind of like behind like that Seven Hills area. You've got that Ivy Gulledge area, and that is an area that I helped a client buy a home in a neighborhood back there. There were, I think I counted like 7 or 8 different builders that had bought and built big neighborhoods. Everybody from D.R. Horton to Lennar, some of my favorite builders. And then you have, who are the other builders? I know that Meritage was building in there. Piedmont Residential was building in there. I don't think Curly Family was. It was Smith Douglas, maybe Heatherland Homes. There were a number of builders just building communities out in that area. So the homes were between 3 and 4, and that's under what the median is for the metro. And it's not the craziest drive back into the city. It's not a fun drive by any means, but if you're not working downtown or Buckhead, then you're working somewhere else, then Paulding County is becoming more attractive from a new construction perspective because builders are building in a price point that people can actually afford over there. That's why when you look at that, there's only 3.7 months there. And in Forsyth County, where every house now seems like it's over $1 million for new construction, they're just kind of sitting. So big difference. Rockdale 4.3. Cobb 7.7. So a lot of these for new construction have crossed that threshold into a buyer's market, which is why you're seeing a lot of these builders offer more and more incentives. So moving on, pending ratio by county. This is last year versus new this year. So black is 2025. Blue, of course, is this year. So again, anything that's over the 25% barrier, so the shaded area, anything that's above that is a seller's market. These are properties where they're going under contract very, very quickly. Anything under this bar is a buyer's market. In the middle, it's kind of a balanced market. So Fayette, I mentioned, it's crossed down. Last year it was in balance. This year it's crossed into a buyer's market. Cobb is the strongest seller's market right now. For single family resale, a third of these properties are going under contracts in a given 30-day period. So that's a lot of movement, a lot of quick movement. DeKalb is almost there. Cherokee's almost there. Gwinnett's almost there. Fulton's in balance. 1 out of 4 is not terrible. Same thing with Forsyth. Let's take a look at list to sales ratio. What are these houses actually selling for? So last year they were selling for a little bit more. This year they're selling for a little bit less. So for example, Cobb, we saw how strong of a seller's market it is for months of supply and pending ratio, but homes are selling for half a point less this year than they were last year. So 97% of the original ask down to 96.5. So even though they're moving, buyers, they're not necessarily selling for over ask. That's not to say that there aren't neighborhoods where that's happening. It absolutely is, but it's a case-by-case basis. So as a whole, in Cobb right now, you can expect to get 3.5% off of the original ask. Clayton is still the same year over year. This is the big pullback here. Look at that. So Forsyth, 96.8 down to 95, and then 95.2 down to 94 in Rockdale. So any surprises? Let me know. All right, moving on. So ratio of active to closed listings. This is really just on resale. So the past charts, when you look at those numbers, factored in new construction. And now when I take new construction out, the ratios aren't as crazy. So right now we're at 3.3 active listings, 12,749, compared to 3,800 closings. It's 3.3 to 1. At the worst of the market, which was actually towards this time in 2012, April 2012, the ratio was 4.4 to 1. So we're at 3.3 to 1. So it is a gap that is widening, but the velocity of it seems to be, here we were rocket shipping up, and now it's smoothing out a little bit. So if it continues to do that, which is very possible, the gap will still widen year over year next year. We'll see. And then 2021 fever pitch of the market was almost an exact 1-to-1 ratio. So that's interesting. So I think I'm going to takes more time to do, but I'm going to keep extracting new versus resale so we can see what's really happening. I think when I look at this, the sky is not falling when it comes to single family. Now let's jump into active listings. I know this says new versus resale, but it's really resale. I'm going to correct the slide. 10,779 active properties across the metro, the 11 counties that make up the greater Atlanta area currently. And this isn't crazy. If you take a look, this is a return to normalization. We got the 10,000 line there. But when you look at this line, 2013 to 2019 were the balance years, and we had roughly the same amount of active inventory in the month of April, and we're there, right? So it's a return to me to normalization, because what happened between 21 and 23, 24 to a certain extent with the market, on one end, you had people who weren't sure what was going to happen with, the health crisis stuff. So they didn't want to put their houses on the market if they didn't know if they were going to have a job, this or that. They kind of just stayed put. And then after that, market went crazy, and then to help reel back in the market, they basically sent interest rates flying, and then people decided to stay put as well. Now people have to move, and they're coming back into the marketplace. That's why there was such a big jump between 24 and last year, and only a more incremental increase year over year this year. We're just back to normalization. So moving on, let's take a look at active listings by county. So you've had a little bit of a pullback for resale in some areas and a push forward. So Gwinnett has more, Cobb has more, Forsyth has more, but the in-town markets, take a look at DeKalb, Fulton. Obviously, there's a lot of North Atlanta that's baked into this. There's some South Atlanta as well, but you have a pullback. There's a contraction in the amount of available properties in the two counties that mostly make up ITP, right? So it's fascinating. More availability outside OTP, outside of the perimeter. Now, moving on, pending listings by county. They're up quite a bit year over year in Gwinnett, and they're up quite a bit year over year in Cobb. So Cobb and Gwinnett tend to be very, very similar in terms of real estate activity and what goes under contract and all of that. They're practically the same. Gwinnett this year is edging out Cobb just a little bit. Cherokee's up, DeKalb's up, Fulton's a little bit of a pullback. Nothing crazy though for pending listings when it comes to single family. Now, closed listings by county, a little bit of a pullback in some areas. Same thing with those same two OTP focused counties when you look at DeKalb and Fulton. So that's a drop there and a drop here, but there are more closings happening in some of these suburban counties, Cobb, Cherokee, Gwinnett, and Forsyth. So failed listings, nothing crazy. A little bit of a pullback in DeKalb, but it's roughly the same thing year over year. A little bit more happening in Cherokee, a little bit more in Gwinnett, a little bit more in Cobb, but nothing super, super crazy. And then seller concessions by county. This here, whenever you have the outline of the slide in black like that, it's because I'm comparing new versus resale. So here you can see that in Fayette, the builders are averaging $18,500 in concessions, whereas the homeowners that are reselling are doing $10,004. It's a big, big difference, but it's a big difference almost everywhere except for Cherokee. So 8.9 on new construction, 8.4 on resale. And I mean, it's a big spread. Cobb builders are just trying to move their things. This is where I think you'll see a gap get bigger is out here in Forsyth with 12 months of supply. I would expect their concessions this time next year to be even higher. So let's keep going. Active listing price cuts by county. So here we can see that most of the counties are between 40 and 44. Here in Forsyth, there's 46% of all active listings have had price reductions. And this is for resale, so we're not looking at new construction. Of the price cuts, 3.3% in Forsyth. The highest on here is 4.8 in Fulton. So that's almost 5% from the original ask on those active listings. You look at pendings, and pendings, 51%, over half of all the properties that are under contract in Fayette needed a price reduction, but then they were rewarded with going under contract. They had averages of 3.1%. So Fulton, we talked about it, was 4.8 is what the active listings have, but they needed 5.9 to attract a buyer and go under contract. So 6.5 in Rockdale, I believe, is the highest one on this list right now for resale. Okay, now that ends our single family portion. We're going to jump into townhouses. So here we go. So the median price premium, new construction still carries a premium. It's at $400 is the median price, and a resale is $369. And if we take a look at it by county, there are less counties. We're not looking at a full 11 because not all 11 counties have a ton of townhomes. So we're going to focus on Cherokee, Cobb, DeKalb, Forsyth, Fulton, and Gwinnett for the townhome portion. For the condo portion a little bit, it's even less. So new versus resale. So everywhere except for Fulton has that premium. And again, same reason. They're not building a ton of townhomes, but you have a lot of them that are going for sale. And there's some very luxurious townhomes that are going for sale in parts of Fulton. So nonetheless, I wanted to show you what that gap was between resale and new construction for price. Right, broken down by county, year over year, prices are down almost everywhere except for in town. So DeKalb up marginally, 294 to 298. Take a look at Fulton. It's up from 433 up to 435. So those are incremental steps up. There are no really crazy pullbacks, a little bit, I guess, crazy. The biggest one on here would be Gwinnett, 355 down to 340. Now, top appreciating zips, there's going to be less of them. But over here in Smyrna has always been a very strong townhome market, put it that way. Last year, the pool of homes that sold for a median price of $400. This year, it's $450. So it's up by 12.5%. You take a look at 30022 on the north side. This is North Atlanta, 457 up to 504. That's a 10% increase. This 448 to 450. Yay, 0.4% increase if you're in 30024. Congratulations. Top depreciating zips. 30328 last year was 650. It's down to 503. It's a 22.5% decrease. Also, 30058 in DeKalb, 252 down to 202. It's an 18% decrease. Then you have some north side stuff where it's down a little bit as well, but nonetheless. Okay, median days on market by county. So it's taking longer to sell townhomes across the board. We're into the 40 days practically everywhere. Cobb's cresting it, so is Fulton. And that's a big jump up from last year. Look at Fulton. This is almost like a 2.5 time longer period to attract a buyer and go under contract this year. 16 last year, 37 this year on resale. We've removed those new constructions. Moving on, fastest moving zips, 14 days. So right now, I think we saw, if I recall, the median was like 48 days, somewhere around there, right? So 14 is a lot faster than what the median of the market is for the overall townhome market. And 30307 in town, it's 2 weeks. 30040, 17 days. There are two, well, at least there's one Roswell zip here, 30075, 18 days. 64, this is West Cobb, 18 days. 66, Sprayberry area of Cobb, 19. There's parts of Lassiter in that too. 30360, 19 days. Moving on, slowest moving zips. 30038 right now is taking 101 days is the median days on market for a resale townhome. It's not great, right? It's taking over 3 months to attract a buyer and go under contract. So if you have a townhome in this zip, you better be priced really well. And the median price in 2026 is 210. So 30327 is 88 days, 85, 84, 80. That's still a lot of days. These are almost twice as fast, twice as slow as what the median days on market is. A lot of them are, they're all, with the exception of Rockdale, Fulton, and DeKalb, townhome communities in these zips. So median days on market by county, new versus resale. The newer ones are taking longer to sell. No surprise there. And Cherokee, Cobb, DeKalb, Forsyth, Fulton, Gwinnett are all in that, we saw it earlier, that 40-ish days, right? But look at that, double, 90 days in DeKalb and Forsyth to sell a townhome if you're new construction. Gwinnett's had a lot of new construction for townhomes. It seems, it doesn't matter where I drive in Gwinnett, there are townhomes coming up everywhere, it seems like. So they're faring a little bit better. Fulton, 49 days. Okay, moving on. Let's take a look at last year versus this year for months of supply. So months of supply, we are a buyer's market almost across the board here. So this is balance between 5 and 6, and there's not a single market that is below 5. So there's no more seller's market when it comes to townhomes. Everything has transitioned into a balance or a buyer's market. So taking a look at months of supply by county, and this is new versus resale. Look at that. Wow. 15.5 months of, that's so funny. I have a client that was looking for a townhome in DeKalb. They wanted to be relatively within walking distance to downtown Decatur. And there was a townhome community that was opening up, and they were so confident that they would sell it very, very quickly. And they might still, because it's such a desirable place to live, but they're competing with 15.5 months of supply. You know, it's like you're going to have to price as a builder more attractively or have some amazing incentives to get people to move because they have so many choices, right? That's a lot of choice. You also have a ton of choice in Forsyth County. There's over a year of supply in Forsyth County for townhomes. Now, where things are moving, I mentioned there's a lot of new construction happening in Gwinnett. They're also moving relatively quickly. 4.6 months is lower than almost anything on here except for Cobb. And that's certainly lower than the resales are there. They're building a lot. There's a lot of supply, but there's also a lot of demand for townhomes in Gwinnett because they're quite attractively priced. Now, pending ratio by county. So 18 to 25% is that balance. Right now, Cherokee is the only place on this where this builder has a little bit of an advantage when it comes to buying townhomes. You look at, anything that's within walking distance to downtown Woodstock, for example. Anything that's going to be walking distance to the new Holly Springs downtown that's being built. Canton. That's kind of the three corridors where these townhomes are being built. And right now, the market favors the seller from a pending ratio perspective. Resale, the other way around. People are seemingly preferring to buy brand new townhomes in these areas as opposed to resale, because that is 1 out of 6 going under contract versus 1 out of 3 for new construction versus resale in Cherokee County. So moving on, list to sales ratio, we'll take a look at that. Last year, some of these were selling for near the asking price. That's a big drop, right? 98% to 96 in Forsyth, 98 to 97. It's a 1% drop in Cherokee, but it's a drop across the board. It's at least a full percent drop across the board for all of them. So, and that's because days on market and inventory and the amount of houses available for sale for townhouses are ticking up. So buyers have more choices. Let's take a look at the ratio of active townhomes to the amount of properties that are actually closing. And this tells a completely different story than single family. So if you watch the single family portion, you'll know here that this 4.7 to 1 for single family was 3.3 to 1. And at the worst of the market, it was 4.4 to 1 for single family. And for townhomes, it's 4 to 1, right? But it's 4.7 to 1 now. So this is a big difference. There are 2,747 active townhomes and only 588 of them closed in that month. This is the worst ratio in the month of April ever. That's the way to look at that. And this gap, like this is what I like to call rocket shipping up right now. So the townhome market is on pins and needles, so I think like if you're selling a townhome, it's even more important that you pay close attention to where you should be priced. And you have to get over the emotion of wanting to price and wanting to get a number that is just not attainable, because you're going to hurt yourself and you're going to hurt your ability to sell the house based on all of the numbers that we've just seen for pending ratio and how many days it's taken to sell these things. So if you have to be somewhere in a certain amount of time, you better darn make sure that that townhome is priced the most attractively possible. And this is very, very telling. So we'll see where that goes. At the height of the market, really 2021, we'll call that like the fever pitch of the market. That was craziness, right? It was a 1-to-1 ratio. One was on the market for every one that was closing. And people were buying, whether it was single family or townhomes. And you'll see here, if you stick around for the condo section, it's a little bit different. But townhomes and single family in 2021, April, they were 1-to-1 ratios. Now look at this gap. That's a big gap that's opened up. So I'm not saying don't buy a townhome. I'm just saying don't be the most respectful with the offers that you make. I'm not saying that you'll be able to necessarily lowball a townhome and get it, but you look at where the numbers are and then you take a step back, especially if that townhome has some days on market on it. You could see yourself getting better deals on stuff. Now, not only that, but I have a client right now that's under contract on one in Duluth, for instance, and the owner of that one just 2 years ago, brand new townhome, they bought it for $475. We're under contract on that one for $450 with some concessions, and so they're selling it for less than what they bought them for. It's not great. This is a market that is quickly correcting. So if you're sitting on the fence about selling a townhome, it might be better to sell now so that you can extract more equity out of the property, because if you wait over the next couple of years and things don't get better with interest rates, that equity that you have today is going to shrink over the next little while. So this might be your signal to consider selling sooner rather than later. All right, here is active listings over the past couple of years. And this, I know it says new versus resale. If you've been following, that's a typo. This is resale only. There have never been, I don't have access to the data before 2010, and I wasn't in real estate before December 2009. So really that's when I first started getting in anyways. But I don't think that there's a period of time where there were more townhomes on the market than in the month of April than right now in history. Because what happened over the past decade plus, townhomes were built everywhere. We were churning them out like crazy. And because they're cheap to build, they're profitable. So builders pivoted and built a whole bunch of townhomes. Counties and cities wanted to increase density, and that's a great way of doing it. So townhomes are everywhere now, right? So that's interesting. Now, taking a look at active listings by county, they're also up across the board. That's not surprising. Pending listings. Now, pendings mentioned that we had a very strong April for pendings, right? It's a big increase year over year. And it was also a big increase for townhomes. So up in Fulton, up in Cobb, up in DeKalb. The only place where it didn't move in the month of April was Forsyth. And it's not because Forsyth is necessarily swimming in townhomes, but it's the same number this year as it was last year. Closed listings, we'll take a look, and we are pulling back in a couple of areas. So we've had pullbacks in Cobb, DeKalb, and Fulton, and a little bit of steps ahead marginally in Cherokee, Forsyth, and Gwinnett. Failed listings, though, there's a big increase in the number of failed listings in DeKalb. Look at that. So 48 to 82 there. Now, everywhere else has been roughly the same, a little bit of an increase in Cherokee and Gwinnett. Take a look now at seller concessions by counties. And this here, again, we've got the black background. So this is new versus resale. Builders are obviously offering more incentives to try and get people in. It's almost 10,000 across the board, except in Cobb, it's 11,006. And you can kind of see how that goes with resale. Resale owners are at 63 to 7,400. That's 5,600 in Forsyth. So if you're on the market as a seller, this is a good information to see, because if you're receiving an offer and someone's asking for, I don't know, 15,000 towards closing costs, you could point to the market and say, well, that's crazy because that's not what the market is actually paying right now. Now, that doesn't mean that you can't get creative if the numbers still work for you to make it easier for somebody to buy the house, but it has to make sense too, right? If they're asking for that much, they're probably needing to cover all their closing costs and or potentially buy down the rates. But I've seen offers like those come in. That's a lot of closing costs. So now we're going to look at active cuts. And again, this is median. We're not looking at average. We're looking at the cuts at the middle of the market. And this is for actives. So 40 to 48% of all active listings have had cuts. And the median cut, for example, in Cherokee is 2.8. The highest one is 4% in DeKalb. How does that compare to the ones that are under contract? So for the pending properties, you're at anywhere from 3.3 to 4.2, and it's slightly less. So the reason it's slightly less is because the properties were more attractively priced to begin with and didn't need as many cuts to get under contract. But those that did need cuts needed cuts that were slightly bigger than the ones that were on the market. That's the way that you need to look at this. So if you're on the market and you're seeing, active listings in DeKalb, for instance, with 4% cuts, and it took 4.2, then if you haven't made a cut yet, 4 to 4.2 is kind of where you would need to be at the very minimum to make something happen, assuming you didn't grossly overprice. Now, the biggest cuts for the pendings are in Fulton. Of the properties that have gone under contract, they had cuts of 4.6% at the median of the market. So condominiums next. So here we're going to take a look at, this is a price premium, and we had a couple of outliers. These are closeout buildings of those penthouse suites that sold for $7 and $8 million in some of those ultra luxury buildings that really pushed up that data. And because the sample size is smaller, when you have those type of sales, they really create a camelback of or an eruption of pricing temporarily. But condos, the resale price $280. Right now, the new price $432.5, and you can kind of see where that premium's been over the past decade plus. Now, the new price looks like it's dropped 50% year over year, but again, it's a small sample of very expensive units that sold, and it's not necessarily the market norm. Now, price by county, here we're focusing on 4 counties with the most condos. Otherwise, there are condos in some of these other counties, but the numbers are so few that sometimes you'll have like no pendings in a month. Like, that's not noteworthy, right? So here we are. Cobb, 285 down to 280. DeKalb, 265 down to 250. Fulton down. Gwinnett down year over year. Top appreciating zips. There still have been a couple where the pool of condos sold for more this year than it did last year. And in Cobb, it was in 6-7. That's Wheeler High School District, 220 to 236, 7% 0.3 increase. 210 to 222 in 30350. That's a 6% year over year jump. Now, where we're seeing depreciating values, here you've got 380 down to 275. 350 down to 301. That's 27 down and 14% down. So not the craziest jumps. Like you're not seeing, like for single family homes, I could have showed you a list of 20 zips. We're keeping it to like 10 in those. But here, there's really only 3 zips where the prices have come down quite a bit year over year. But that's also where most of these condos are situated. So it makes sense. So median days on market by county. Here we are. It's taking a lot more time across the board. No surprises, right? 26 to 48, 28 to 48. Like these are big jumps. 36 to 59 and 28 to 48. So lots of similarities again between Cobb and Gwinnett, and surprisingly, DeKalb. It's the same thing year over year over year, or property county versus county versus county is what I was trying to say. And then here, fast moving zips. 20 days. So we saw that I think the median for condos is like 78 days right now. So 20 days, they're moving quickly in 6-8. This is probably all of those condos along Columns Drive that are zoned for Walton, right? 30068. I would say that a good portion of them are probably in there. You've got a lot of different condos along there. So that's probably what that is. 20 days median. This here, Roswell, you've got 2 Roswell zips on here, 20 days and 36 days. So people do like condos in the Roswell area. And then, you kind of see 20 to 40 is the range there. And we have what the median price is for each of these. So these are the fastest moving zips. You can kind of see what those price points are. The slowest moving zips, 97 days for 30305. And the average price there, the median price is 3069. That's a lot of time. It's almost 100 days where the median days on market is. So 90 days, this is in town 30308, 30326, 86, 30303, 84, 30144, Kennesaw, 68 days, 30327, 65. That's a lot of time. So I mentioned for townhomes, right? You're selling a townhome. You want to be very strategic about how you price. The same thing is true for condos, even more so. Let's look at some of these months of supply. So almost across the board, we're almost out of a balanced market into a buyer's market, or we're already there. So Fulton is there. This year, 8.9% months of supply when it comes to condos. And then for Cobb, we're cresting that buyer's market territory above 6. DeKalb is there. It was there this time last year as well. And Gwinnett's kind of stayed pat, 5.8 to 5.8 year over year. But it's going to feel like a buyer's market nonetheless. All right, pending ratio. Everything's a seller's market with the exception right now of Gwinnett. So Gwinnett was one of the other ones at 5.8 months of supply, which was a balanced market. And here at 20%, we're a balanced market there as well. 12%, that's 1 out of 8 and change condos going under contract in a given area in a 30-day period. So that's not a lot of movement. You want to be really well priced and have a property that is just that, like, it's market ready, great condition, it's staged, you've got great marketing and photography and all that stuff. And also the most important part of everything is you're priced well. Otherwise, you're going to be the 7 other condos that are sitting on the market hoping that they get a chance to sell the month after. There's only 1 out of 8 and change going under contract in a given period across Fulton County right now. So list to sales ratio down across the board. If you're in the market to buy a condo, you can expect to get 5 to 6% off of the original ask price. So that's good. Some good discounts there. And then look at this. So we were at 3.3 to 1 for single family. We're at 6.8 to 1 for condos. And this is also the worst ratio on record that we have here. So 5.1 back at the bottom of the market. 2012 was the bottom of the market. And here, this is actually an inverse back in 2021, which is where single family and townhomes, where it was a 1-to-1 ratio. We weren't quite there for condos. Condos took an extra year, but in 2022, there were more closing than there were active in the month of April. So it was 0.8 active listings for every closing. That was a great time to sell a condo. And then as these rates continued to be where they are, inventory shot up and the number of closings went down. It's almost as many townhomes as are in the market, but only 324 closings. So let's keep breaking this down. So active listings, again, new versus resale. This is only resale. That's a typo. I will correct that when I share the slides. Whereas single family is a return to normalization, condos and townhomes as well, we're in a very uncomfortable territory because the last time we had this much inventory was at the bottom of the market, and we have that much more now. So for condos, just as I said for townhomes, there are some very murky waters ahead. This is a market that is correcting right now, and this might also be a sign that if you own a condo, it's probably and you're going to be keeping the property. You think, you might not be ready to sell right now. You're going to keep it for another year or two. Your equity is higher today. In a year or two, it's going to be less. And then after that, who knows? A lot depends with what's going to happen in the market. But as these active numbers get higher, and when you look at these closings, let's dive into the numbers because I'm going to keep talking about that point. Active listings in Fulton has most of the condo buildings. So of course you have the most active listings there, right? A little bit of a pullback in DeKalb, but otherwise there's a lot of inventory everywhere. The ones that are going under contract, there's 210. It's a big jump year over year in Fulton. Nothing crazy from a pullback perspective. The problem is active inventory versus closings. And this is where this is. So there are less closings happening everywhere except for Gwinnett, but Gwinnett isn't traditionally known for a ton of condos. But in the markets that are the bigger condo markets, you have a lot more inventory, but you have less closings as well. That gap continues to widen. So my prediction, especially when you look at the failures coming into here, more equity today than in a year. More equity today than in 2 years. I think that it's going to take a while for, especially the condo market, to kind of find a leg to stand on to continue appreciating. I think we're going to see home prices come down. So if you're thinking about or you're on the fence about selling a condo, sooner rather than later, if your goal is to extract equity, if you keep the property and you don't care, you're just going to keep it for a long time, everything will work itself out over the next decade or so. It always does. You look at the bottom of the market in 2012, where prices were and where they came back and where they were at previous highs. If you never sold and you kept, you were fine, right? But people get emotional about this and they tend to buy high and sell low. And that is a recipe for foreclosure or a short sale, which, short sale is obviously better than a foreclosure, but it's still not a winning recipe here. Now you have an opportunity while there's still equity to sell some of these units if you're going to sell anyways. If you're not planning to sell and you have a long enough time horizon, great. Percentage of sellers paying closing costs right now in condos, it's 63. Basically most of the market, right? Over half of the market in DeKalb and Fulton are paying closing costs. 2/3 almost in Cobb and Gwinnett. And what they're paying by county, roughly $5,000 to $5,500. But these condos are also a lot cheaper. So proportionally speaking, it's still a bigger number. Active price cuts by county. We've got bigger cuts. So roughly 37 to 45% of these listings that are active have had one or more price reductions. And of those that reduced, that are between 3.5 and 5.4. So the biggest cuts are in DeKalb right now. Now, of active listings, let's take a look now at the pending listings. So the pending price cuts, you have 38 to 44% of all of these active pendings have had one or more price cuts. And we're ranging from Gwinnett's not bad, like 3.1%, but look at DeKalb. To attract a buyer and go under contract, they needed 6.1%, Fulton 4.9%, and Cobb 5.7% of those that cut. So how does the market impact you? If you have questions or you want to know, you're thinking about buying or selling and you don't want to make a decision at the wrong time, and you don't have an agent that you can lean on, feel free to reach out and book a discovery call. It's stuff that we can talk about your specific situation. If you're going to watch more videos today, YouTube definitely thinks you should watch this one next. Thank you so much for watching, and I hope to see you on the next one.